Hey guys, what's up? Welcome back, folks. Wow, it's a full house. Felicia, Lynn, AG80, SK, Frank, who else? SUPV, Soul Impact, Sue, Down the Great, Mazugo, Beverly, Joel, what's up, folks? Shell, and James, what's up, folks? Good evening. Hey guys, what's up? There you go. Yeah, we are live. Hello, folks, from the beautiful city of Charlotte in North Carolina. Take a look at the bloodbath that we saw today in the markets. Today we had an ugly trading session. And I kind of warned you guys pre-market, both, because I am streaming. This is a private stream for the members of Chris Saint's Discord and also for the members of our Discord in English, of the Bilingual Stock Market channel. And I warned you guys about what could potentially happen today. I was expecting profit taking ahead of the CPI. That's exactly what happened. And it is very difficult. By the way, drop a comment down below and let me know what stocks you guys want me to go over. So, despite the fact that today we had a very ugly close, guys, the SPY, the S&P 500 broke, the 50, the 20, the 5, 5, 20, and 50-day moving averages. To the downside, those moving averages were broken to the downside. So this was a very ugly close. But tomorrow at 8:30 a.m. Eastern Standard Time, the cooks of the Bureau of Labor Statistics will be releasing the CPI data report of January. And that is going to be a big one, guys. Yeah. I mean, there's a potential scenario in which the report comes out as expected, and it could be, if that were the case, the report could be in the nothing burger category, right? But if the report comes out either higher than expected or lower than expected, I am leaning towards lower, not because inflation is going down, because this report is BS. It's bullshit. Yeah. Who in its right mind, guys, believes that inflation is going down in this country? Who? Yeah, someone that doesn't go to the grocery store, right? Yeah. Inflation is going up. We all know that. But the cooks of the Bureau of Labor Statistics, and of course I am not going to get here into a political discussion or whatever, or macroeconomic discussion. That's not what we are here for, right? But the cooks of the Bureau of Labor Statistics might tell us tomorrow that inflation is going down. So, yeah. So, look. Let me make a summary of what happened today in the market. So, the Russell 2000 went down today 2.2%. The Nasdaq down 2%. S&P 500 down 1.57%. And the Dow Jones went down 700 points, guys. Ugly. The Dow Jones went down today 1.34%. So, if the core CPI or the core CPI, as we call it in our Discord, so if the CPI, guys, didn't come out tomorrow, or if the CPI weren't released tomorrow, we could say here, guys, that today's close was very ugly, and that this close might be signaling either an upcoming test of the 100-day moving average of the SPY, this rising blue line that I am pointing out with my mouse at $678, or we could also make a case that the SPY might be headed lower than the 100 DMA. Today's price action was ugly. Take a look at this white line. This is none other than the 5-day moving average, 5 DMA, broken to the downside without any problems for the bulls. Look, for the bears, that is, sorry. Slightly below the 5 DMA, So the 5 DMA in white, the 20 DMA in pink. Take a look at these guys. No problem for the bulls. Sorry, for the bears. Again, let me zoom in here. Look. Again, the 5 in white, the 20 in pink. Look. Both moving averages that were supposed to provide at least a bit of support were broken to the downside very easily. And the volume was massive. Massive. Let me zoom out here so you can see it. Look. So take a look at the spike in volume, guys. Down here. Look. I could even... Look. So we broke 2 important moving averages on higher than usual volume. And take a look at how the volume went up into the closing bell. Look at this. Massive downwards pressure into the closing bell. But, and again, since the CPI data report will be released tomorrow, so we have 3 potential scenarios here, guys. And of course, I am going to be speculating about if the report will come out higher than expected or lower than expected. You know, again, we are not here to talk about that. So, long story short, the report is expected to reflect a month-over-month increase of 0.3%. Right? Say, let me take a screenshot here, guys. And this is something that I explained to the members of our Discord on Saturday and today as well. So, if the report comes out, say, reflecting an increase, a month-over-month increase of, say, 0.5%. In my opinion, guys, this would unleash a bloodbath in the markets, taking into account the result that the jobs report of January reflected or showed last Wednesday. Now, say that the report comes out as expected, 0.3%, this should be a nothing burger. The market shouldn't be doing much. If the report comes out at 0.3%, potentially, you guys know that I never make any predictions. I am not in the prediction business. That's not the business that I am dealing with. I am in the business of taking a look at the technical charts and trying to understand the message that the technical charts are sending me. All right? Now, but say that the cooks of the Bureau of Labor Statistics, the BLS, the good old BLS, do a good job and they cook the report better than expected. Say that the report reflects a month-over-month increase, and I'm talking about the core CPI, by the way, of 0.1%. Even a 0.2%, guys, would be bullish and could be giving rise to a rally. At least to a recovery rally. Maybe the SPY can go up back to, I don't know, maybe 690, 692. So the report comes out at 8:30, and in my opinion, this could be a big market mover. It should be. Unless the report comes out, as I said, guys, like as expected. If it reflects 0.3%, then yeah, the technical charts will let us know what to do, and we shouldn't see an important push to either the upside or the downside. I mean, the technical charts will let us know what to do, of course, regardless of the result that the report shows. But what I am talking about here is a potential very noticeable reaction to either the upside or the downside. So we'll figure that out tomorrow at 8:30 a.m. So it is very difficult to go over the SPY and say, yeah, this was a very bearish close. This was a very bad close. It was. But again, guys, if the cooks of the Bureau of Labor Statistics say that inflation went down month over month, or that the increase on inflation was lower than anticipated, I would expect a sizable rally tomorrow here, guys. Yeah, maybe the rally, fades away. It can happen, but that would be a very bullish development in my opinion. So that is the situation that is going on the SPY and the markets in general terms. I told you guys, by the way, let me show you. Earlier on today, pre-market, take a look at this. I said, this is Christian's Discord. So my first post came out at 9:14 a.m. I told you, don't be surprised if we see de-risking or profit taking, especially into the closing bell. Yeah, the crystal ball, yeah, worked once again. It was expectable, guys. So the jobs report that we got yesterday came out better than expected. So that could be preventing the Fed to keep cutting rates, right? Now, if tomorrow the CPI data report comes out hotter than expected, then that would be a confirmation that we will not see rate cuts anytime soon. And that is bad news for the markets in general terms, especially for the IWM, for SoFi, for Upstart, and so forth. And especially as well for the higher multiple stocks that you guys love. And you guys, I guess that you guys can figure what stocks I am talking about. The Aklos of the world, the Robinhoods of the world, the Palantirs of the world, and so forth. So, any technical analysis, guys, that I can do today is subject to whatever happens in general terms with the markets tomorrow once the core CPI is released. Now, take a look at this, guys. So these are the 11 sectors that trade inside the S&P 500. And today, only 3 sectors went up. Look, utilities up 1.48%, consumer staples up 0.92%, and real estate up 0.16%. And take a look at your technology, XLK, down today 2.63%. On a day, guys, on any given day in which technology goes down 2.63%, it is extremely difficult for the SPY to be able to have a positive day. Very, but very, very, very difficult. To pull off a green day, it's almost impossible because of the weight, market cap wise, of the technology sector. But take a look. Financials, another very important sector inside the S&P 500. Now, it turns out that artificial intelligence will be disrupting the financial sector. And now they hate financial stocks. JP Morgan, Schwab, which by the way is my main broker, Goldman Sachs, Morgan Stanley, and so forth. Now, the financial sector is going down significantly. Take a look. Communication services, your Meta, your Google, down today. So this sector went down today 1.80%. And what about consumer discretionary? Your Amazon, your Tessie, down 0.38%. But again, guys, so the general picture, if we see a general picture about what happened today in the markets in isolation, without taking into account that the cooks of the Bureau of Labor Statistics will be releasing the CPI tomorrow at 8:30 a.m., then we can make a case that today we had a very bad close and the market and the markets could keep going down and stuff like that. But we have to wait until tomorrow at 8:30 a.m. And if something unexpected happens with the cooks of the Bureau of Labor Statistics and the report happens to come out hotter than expected, oh boy, buckle up. Buckle up. The bears, and I am not a bear, guys, by the way. Some people say that I am a perma-bear. I am not a perma-bear. And I am not a bear eater. But the bears are saying, take a look at the price of oil. Look, this is oil. So the bears are saying, and we can make a case about this, why not? So take a look. So oil, which is a very important component, guys, inside the CPI, even though, guys, the methodology that they utilize in order to measure inflation changes depending on the circumstances. So, in other words, the way that they cook the reports changes depending on the circumstances. But aside from that, so we all know that gasoline prices is obviously a very important component inside any inflation report. And then we have the core CPI, which supposedly doesn't take into account the prices of food and energy, but you guys understand what I'm saying, right? So the bears are saying that, and I am skeptical about this, but we'll see tomorrow, that the price of oil, take a look, this is /CL, okay? So oil, crude oil, the futures of crude oil. So the birds are saying that since January 2nd and until the last day of January, the price of oil went up 16%. And that is the reason why the report might come out hotter than expected. I am skeptical because I believe that, as I just said, guys, that every single macroeconomic data that is being released by the government is cooked. It's fake data. But I don't know. Maybe the report comes out tomorrow hotter than expected and they kill the tape. We'll see. We'll see what happens, guys. Long story short, any technical analysis that I can do today is subject to the general market conditions of the market, general conditions of the markets once the CPI is released. All right. Okay. Any questions, guys, about the SPY, about the 11 sectors to trade inside the S&P 500, about the moving averages that I use? And please let me know what stocks you guys want me to go over. Today, a lot of stocks got demolished. Unbelievable. Yeah. So the weakness that we are seeing in the markets is kind of increasing, guys. So the breadth is starting to deteriorate. And that isn't signaling something positive. But again, guys, it all comes down to the technical shorts. So we cannot make a bearish case out of that quite yet. We cannot make a fatal case out of that quite yet. So Jose is over here. Shelly, T, you short on Thinkorswim? Yes, I do. Yeah, correct. Hey, Alvaro. So what stocks you want me to go over? Drop a comment on the live chat while I take a sip here of this. What is this? Sprite, yeah. Let me see. Meta. Amazon, yeah. I've been selling calls of Meta, guys, over and over and over and over and over again. Take a look at this. And this is an information that is available for the members of my Patreon. Look at this. Take a look at what I did with Meta today, guys, by the way. Take a look at this. So as of now, I own a position in Meta, 101 shares. You might ask, why do you have 101 shares of Meta? Why not 100? Because I made a mistake. I was trying to buy back a cover call that I sold, and I ended up buying one additional share. It is what it is. So take a look at these, guys. So today, and I guess that all of you know how to sell calls, right? Probably, I guess. Look at these, guys. So these are two trades that I closed today. So on January 21st, I sold a call option of Meta expiring on February 20th with a strike of $665. I was paid on January 21st $1,056. Then today, 6 hours ago, take a look, I was able to buy back that call paying $897. I made like $160. Then once I bought back the call, I recaptured control, or I had once again my 101 shares of Meta available to do whatever I want to do with those shares. So I sold another call option, guys. Today, take a look, 5 hours ago. I sold another call of Meta expiring on February 20th with a strike of $660. I was paid $1,045. And into the closing bell, Meta started to pull back with the markets as a whole, and I bought back that call and I paid $903, guys. $140 here, guys. This was a day trade. Applying a very low risk strategy. All of you should know how to sell calls and puts. I mean, all of you should know how to sell volatility, how to sell options. You have to learn how to do it. All right. So Meta. Let me pull up here a 4-hour chart of Meta. By the way, full disclosure, guys. I told the members of my Discord today that should the markets explode to the upside tomorrow, because, you know, the CPI data report comes out lower than expected, you know, I am closing this position. I am locking in the profit. And take a look. I own, did I show you the position? Yes, I did. I have a very beautiful position, I would say, here in Meta. Look at this. 101 shares with a take a look. Take a look at my Average cost, guys, 618 bucks. This stock explodes to the upside tomorrow because, again, you know, the markets love the CPI data report. I am out of this. Why, you may ask? Well, the technical chart is starting to look ugly once again. And guys, and I know that many of you only pay attention to the technical charts, and that's perfect. I love it, of course, because only price action pays. But from a fundamental standpoint, guys, I am starting to be a bit concerned about the capital expenditures that all of these companies have announced. Amazon, Google, and Meta. So the net aggregate opinion of the markets is telling us that they don't like the way that these companies are investing on artificial intelligence. So these companies might be doing the right thing because artificial intelligence is the future, bro. That's okay. But in the short term, I think that we could potentially see lower prices across the board on the Amazons of the world, the Microsofts of the world. Needless to say, guys, that's another very ugly looking chart. The Googles of the world and the Metas of the world. So I'm starting to be very concerned about it. So if we see a pop on Meta tomorrow, I am going to be locking in the profit and walking away with my money. It's been a phenomenal position for me. So I am taking my money and running away. So the chart looks ugly. Take a look at the 5-day moving average in white, downward sloping. Today Meta broke the 100 DMA, the 20-day moving average, and the 50-day moving average. Take a look at how no buyers stepped in order to defend price at any of these moving averages. That implies, guys, that the downwards pressure that we saw today was massive. So that implies that the markets are selling first and asking questions later. You don't want to see that on a stock, guys. You don't want to see this behavior. Look, we saw a test of the 100 DMA right at the open today, broken to the downside. No buyers stepped in here. 5 DMA, broken to the downside. No buyers stepped in. 20 DMA, no buyers stepped in. 50-day moving average, no buyers stepped in. So sometimes, guys, you have to, again, you need to try to understand the message that a technical chart is sending you. Buyers are not doing anything here. There's an absolute lack of conviction. No one wants to buy Meta. The price action that we saw today, guys, was ugly. The downwards pressure was massive. And that is concerning. It is very concerning. And on top of that, guys, I mean, you put 2 and 2 together, and sometimes you get 4. So what is going on here, guys? Take a look at Microsoft, for instance. For example, take a look at Microsoft. And again, guys, if I show you the most recent earnings reports of these companies, those reports were phenomenal. All of them, Microsoft, Amazon, Google, Meta also killed it. Take a look at Microsoft. Buyers are nowhere to be found. And take a look at Amazon. So what is going on with these companies? The markets are sending us a clear message. I don't like the way that you're spending money on artificial intelligence. You might be right 1, 2, 3, or 4 years out, but in the short term, I don't like what you're doing. The message is crystal clear, guys. So you have to be careful. In the case of Meta, let me pull up here once again a 4-hour chart of Meta. So the only way in which I could kind of validate a trade here would be if Meta recaptures the 100-day moving average, which was broken today to the downside very easily by the bears. So, sorry, I need to correct something here quickly. So here, okay. All right, so look, the 100 DMA is signaling as of now $670. So what's the logic behind this? You guys went, so since these moving averages were broken to the downside very easily today, and buyers didn't step in order to defend price, you want to see buyers doing the opposite relative to what happened today. So you want to see buyers recapturing the 50, the 20, the 5, and the 100-day moving average. That's when you want to buy Meta. So above $670, maybe the door opens for a test of the 200-day moving average at $688. Now, if Meta doesn't recapture the 50-day moving average at $658, this technical short could start to attract sellers, more sellers. It attracted a lot of sellers today, but it could attract more sellers. So this is not a good looking short, and this is the reason why I am telling you that if I see Meta popping going up tomorrow, because I don't know, for whatever reason, maybe I don't know, maybe some news comes out or they liked the CPI, I am probably locking in the profit because this technical short doesn't look good. And if we take a look at an anchor VWAP, let me see, where do we have buyers trapped at from all-time highs for Meta? Take a look at this. So these are anchored volume weighted average price lines, right? So this blue line that I am pointing out with my mouse happens to be an anchored volume weighted average price line that comes from where? From all-time highs. So Meta went up to $794 back in mid-August of last year. So the average market participant that started a position in Meta back in August of last year at when this stock was trading at $794 has an average price as of now of $677. And let me see, take a look at this other blue line. This is an AVWAP or an anchored volume weighted average price line that comes from where? From last year's low. So Meta in mid-April of last year went down to $485. So the average market participant that started a position in Meta when this stock went down to $484, as of now has an average cost of $674. This is a big level of what, guys? Of overhead supplies. Overhead supply. Take a look. Between $677 and $674. Here. And take a look at the spot at the level, guys, at which Meta has been struggling recently. Look, rejected, 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 and rejected. Why? Because we have a lot of buyers trapped with, as of now, unrealized losses at $678 and $674. So if we reconcile that information with this 4-hour chart, what do we see here, guys? $674 is a level that is pretty much coinciding with the 100 DMA that I just told you guys about. Yeah, the 100 DMA is signaling $672. Take a look, guys, at the level at which Meta started to go down from today. What about $675? Guys, there are no accidents nor coincidences. So Meta failed today right at that level, guys. Why? Because we have overhead supply. We have a very tough level of overhead supply between 675 and 678. We have buyers trapped from all-time highs and buyers trapped from last year's low for Meta, 675, 678. So this technical short is guilty until proven innocent. And you have to be careful with Meta. Yeah. What else do we have here? Amazon. I mean, the same thing goes for Amazon. Let's go over Amazon. Let me show you something, guys. By the way, this is interesting. So, oh my God, I have an issue here with the N. Okay, there you go. Take a look at these, guys. So if we pull up here a 4-hour chart, this technical chart couldn't look uglier. Take a look at this disaster. But let me show you something that is pretty interesting. So look. Okay. Look. AMCN. Okay. So if we take a look at the most recent earnings report of, by the way, guys, let me write something down here. Okay. So what happened with the most recent earnings report of Amazon, guys? Was it that bad? That this stock looks like this? Let me show you something. Take a look at this. So take a look at revenue. Oh, let me refresh this website. Okay. Take a look at this, guys. Revenue, all-time highs. This company posted a year-over-year revenue growth of 13%. Take a look at the revenue, guys. $213 billion. Look, take a look at this. We're talking about a company that has a market capitalization of almost $2 trillion. Impressive. Take a look at the growth. Impressive. What about the net income? The final profit that Amazon made on its last reported quarter. Take a look at this. $21 billion, guys, on net income. Impressive. On one single quarter, guys, this company made a total profit, a net income of $21.2 billion. So what's not to like here? Let me show you what's not to like. Take a look at this. Let me pull up here. Okay. Look at this. And here's the big deal, guys. Capital expenditures, all-time highs as well. Look. And they guided for $200 billion on capex for 2026. So go figure, guys. Analysts were expecting capex for full year 2026 to come out at $140 billion, which is already a very difficult figure, to wrap your head around it, right? Well, they up-guided on capex up to $200 billion. So again, when you reconcile this information with the technical chart, you know that, potentially Amazon could be dealing with lower prices. Yeah. This is again, guys, this is the net aggregate opinion of the markets telling you that they don't like what the company is doing at present. Very ugly looking chart, guys. So take a look below the 50-day moving average, the 100, the 20-day moving average, the 200 DMA, and take a look at the slope of the 5 DMA, of the 5-day moving average, clearly declining. This is a technical chart that is under the total control of sellers, 1,000,000%. So if you wanted to buy the dip in Amazon, guys, you need to wait until buyers step in minor time frames, and when the technical chart or when Amazon as a stock starts to show a little bit of life in minor time frames. So how can we know that buyers are stepping in minor time frames? Well, for that purpose, we utilize the 5 DMA, the 5-day moving average, which as of now is signaling $206. Say that Amazon recaptures $206 and starts closing candles above 206. And the 5 DMA, guys, since that moving average is showing you the average price of a security during the last 5 days, that is a very fast moving average. So say that Amazon closes 1 or 2 trading sessions above that 5 DMA, that implies that moving average will start to rise. So that's when you say, okay, buyers are starting to step in. Let me give it a shot. But don't do anything here. Don't try to be a hero. Yeah, the technical chart is showing you that as of now, no one is interested in buying Amazon, or that the average market participant is not interested in buying Amazon. And one of the issues, guys, that both Amazon, Microsoft, which is also another stock that has gotten decimated, and so many stocks. You guys know what is going on with as of now, with software stocks. It's ugly, guys, ugly. So the main issue that these stocks will be dealing with whenever they start to recover, if that ever happens, because you never know, right? Sometimes stocks start to go down and they never come back, guys. It's a risk. Yeah, it's a risk. Of course, so we are in the risk business. That's why we need to manage risk accordingly. So if Amazon starts to recover, and the same thing goes for Microsoft, and the same thing goes for Meta, and I don't know, so many stocks out there that look very ugly as of now, the main issue that those stocks will be dealing with is the overhead supply. Again, buyers trapped all over the place. In the case of Amazon, guys, this is bag holder central. So that's another issue that you need to take into account. If you're trading Amazon, say that Amazon, guys, recaptures the 5 DMA, 206, and you purchase shares at 205, and Amazon goes up to $215. Do not fall in love with downtrending stocks. This is a golden rule number one of this business, guys. Do not fall in love with downtrending stocks. Why? Because there's a lot of overhead supply. Whenever you are dealing with a stock that is in a major downtrend, that implies that you have buyers trapped all over the place. So if you start the position here as a trade, I'm talking about a trade, guys. Maybe you believe that Amazon is the future, bro, and you want to hold shares of Amazon during 20 years. That's a whole different story, right? But if you start the position, a trade on a downtrending stock such as Amazon, and the trade goes in your favor right away, do not fall in love. Do not fall in love. Very ugly looking chart, guys, so just stay away from Amazon. Yeah, in my opinion. Let me take a look, by the way, at the market structure of AMZN. What do we see here? Let's go see Amazon. And take a look at this market structure. Jesus Christ. God Almighty. So this is a market structure chart. Wow. Oh my God. I should have gotten Amazon puts into the close. So what you guys see here, guys, it is a market structure chart. So on top, you see the demand of the stock, buyers, and at the bottom, the supply. So the demand is represented by the blue shaded region that I am pointing out with my mouse. Take a look at the demand. It collapsed completely. Again, guys, buyers are nowhere to be found. And take a look at the supply, sellers going up. Ugly, ugly, ugly. And we can easily reconcile this extremely ugly market structure chart with the 4-hour chart that is here. Look. Downward sloping 5 DMA, below the 200 DMA, below the 20 and the 100 DMA, the 50 as well. Stay away from these, guys. Wait until buyers step in. Long term, I think we're good with Amazon. Yes, but if you're buying for the long term, which is valid. Take a look at this, by the way. Take a look at this. I am glad you brought that up. Look at this. Take a look at the ratios. Take a look at the forward P ratio of Amazon, guys. Look. So 25. If you buy shares of Amazon today or tomorrow, I mean, you can buy some shares of Amazon after hours at $199. You are purchasing shares of Amazon at the cheapest price ever for this stock. Look at the forward PE. So when Amazon was trading at who knows what price back in 2018, it was trading at 125 times forward earnings. Look, 2020, 119 forward earnings. 2023, 75 times forward earnings. And today, it is trading at 25 times forward earnings. Again, if you buy Amazon shares as of now, as a long-term investment, you are acquiring shares of this corporation at its cheapest price ever. And remember, the price that you pay for a security, or the final price, the conceptual price, I would say, that you pay for a stock, is not the nominal price. Many of you guys make that mistake. So many of you guys, let me show you this. So Amazon was trading at 75 times forward earnings back in 2023, right? Look, you guys can see the forward PE there? Okay. Many people make this mistake. So they pull up a chart of Amazon and look for the year 2023. Let me see. 2023. So in mid-2023, Amazon was trading at $135 per share, right? So whoever purchased shares of Amazon in mid-2023 at $135 paid a higher price for the stock, a higher valuation than whoever purchased shares of Amazon today trading at 25 times forward earnings. So the price that you pay for a stock from a long-term investment perspective has to do with the valuation that you are paying for that stock, not the nominal price. Did I make myself clear here? It's the valuation, guys, not the price, the nominal price that the stock is trading at. So yes, if you love Amazon and if you believe that Amazon is the future, bro, yes. All right. Awesome. So let's keep going. You guys are asking about IREN. IREN. Let me go see. IREN Ltd. Alrighty. Went down today. I mean, most stocks went down today, right? Oh, let me show you this, guys. I forgot to show you this. So take a look at the market movers today. Take a look at what happened inside the S&P 500. 343 stocks going down and 160 stocks going up. Ugly. The Nasdaq 100, 78 stocks going down and 23 stocks going up. And take a look at what happened inside the Russell 2000. 1,468 stocks going down and 438 stocks going up. So for the most part, the average stock out there ended up going down today. Yeah. And IREN wasn't the exception to the rule. So not a good looking chart, guys. We have a declining 5 DMA. This stock is trading as of now below the 20 and the 100 DMA, below the 50-day moving average. So an absolute no touch below the 5 DMA, 5-day moving average, 5 DMA, $42.70. If this stock, I mean, taking into account the way that the technical chart is looking like as of now, if IREN starts to close candles below the 5 DMA, $42.70, it looks like we could see a potential test of the 200-day moving average in red, 200 DMA, at $33.60. If I zoom out here, guys, take a look at how this 200 DMA acted as support through the penny. This is a very important moving average, guys. It shows us the average price of a security during the last 200 days. Very important. This is a very important moving average. Look, it acted as support through the penny a few days ago. I mean, we can make a case that if IREN makes a new test of this 200 DMA at $33.30, and again, during or on regular market conditions, without the markets collapsing to the downside for whatever reason, $33 already acted as support, and it could act as support potentially once again. Ideally, you guys want to see IREN recapturing the 5, the 50, the 100, and the 20-day moving average. So ideally, you want to see this stock trading above $51. So you, for the most part, guys, and this is my favorite technical setup, for me to start a position, or I would say that the average trade that I start is opened on stocks that are uptrending. So I try to pick stocks that I can tell that are under the control of buyers. So about $51, this would be I would say a favorable setup in order to start the position here. And don't be surprised, again, if IREN doesn't recapture the 5 DMA, 5-day moving average at $42.40. Don't be surprised if we see a test of this rising 200 DMA at $33.30. Not a good looking chart. Let me take a look at the market structure of IREN. What do we see here? Let me go see. IREN. Alrighty. IREN Ltd. IREN Limited. Look, the market structure doesn't look good at all. Take a look. Again, this is a market structure chart. So what you see on top is the demand represented by the blue shaded region that I am pointing out with my mouse. It is clearly going down. The supply is also going down, guys, but from a market structure standpoint, you never want to see the demand of a stock going down, because the market structure or a market structure chart has to do with what, guys? With the correlation between buyers and sellers in minor time frames. So this is not a good looking market structure chart. This is not a good looking 4-hour chart. So below this 5 DMA, guys, I would be careful with IREN, because we could see potentially a new test of the 200 DMA at $33.70. Let me see. And there's no need to take a look at anchor VWAPs here, guys, I guess, because yeah, the stock is way off the highs. I mean, I can take a look at it quickly. So again, guys, I use anchor VWAPs in order to spot potential levels of overhead supply. In the case of IREN, guys, take a look. Big level here, guys. $49 and $48. So I know that I have a lot of market participants with positions on IREN Limited with an average price of $48 ish. What do you think the average market participant that as of now has a position on IREN Limited with an average price of $49 would do if the stock goes up back to $49? Most of them will probably take their money and run. Break even and take their money and run. Potentially. That is, of course. So, let me see. Sale, correct, you. 100%. Yeah. You guys are also asking. Let me go over SNDK. Someone is asking about SNDK. So, memory. SNDK. Sorry, guys. SNDK. There it is. So, SanDisk. Take a look at this, guys. Unbelievable. So, the markets got annihilated today, and the stock went up. What does this mean, guys? The relative strength that this stock shows is nothing short of extraordinary, guys. Impressive. In a day, I mean, you guys just saw the breadth that we had today in the markets. Ugly. Most stocks out there today went down, and SanDisk, despite the fact that today we had a very ugly day, looks very but very good on a 4-hour chart. So this implies that this stock, as of now, has a very favorable momentum, and that the risk could be to the upside. Yeah, I have nothing negative to say here. Trading above the 5 DMA, we have a rising 20-day moving average, rising 50 DMA, rising 100 DMA, a rising as well 200-day moving average. So as long as the bulls of SanDisk can consolidate or sustain price above $596, this situation could be attracting more buyers into this technical chart. And so all-time highs is at $682. What happens if SanDisk bursts above $682? You guys set the price. If SanDisk enters into no man's land, so if SanDisk makes a brand new all-time highs above 682, so how higher can it go? 690, 700, 800, I don't know. The sky is the limit. This is a very good looking chart. And I gotta tell you guys, despite the fact that this stock has gone up a lot recently, you all know that, I use the 20-day moving average in order to determine if a move to either the upside or the downside is potentially extended. As of now, SanDisk is trading, and again, the 20D, my 20-day moving average, my 20 DMA, is in pink, right? So SanDisk is trading 15% above its 20-day moving average. So it's not extended. It can keep going up, and it looks like it could keep going up. Now I'm curious about the market structure of SanDisk. Let me see. The Sndk. There you go. What do we see here? Let's go see. And look, the market structure in this case cannot be reconciled with the 4 hours chart. Take a look. So the demand is going down and the supply is rising. So this market structure chart, guys, and again, despite the fact that it looks absolutely different relative to the 4-hour chart that I just showed you here, in which we can see that this stock is under the control of buyers, but the market structure chart is letting us know that despite the fact that the technical charts don't show it, sellers could be starting to step in here. So what do I do in this case, guys? If I have a clearly uptrending stock that is showing me that sellers could be starting to step in minor time frames. If that is the case, I have to be careful. I have to be careful. So SanDisk, in my opinion, would be a no-go if the 5 DMA is broken to the downside. $589. As long as this stock remains above 589, yeah, we're good, and we can kind of rule out, the not good looking market structure chart that I just showed you. Yeah. Palantir, bro! Palantir. I mean, I don't know what to say. I don't know what to say here, guys. I mean, by the way, I have something interesting to show you. Take a look at this. This is an information that I shared yesterday with the members of our Discord in English. So take a look. This is a 4-hour chart of Palantir once I zoomed in from all-time highs. Take a look at this. So try to take a picture of this 4-hour chart, right? Again, from all-time highs. Okay? Now take a look at these, guys. Let's reconcile that technical chart with Robinhood's technical chart from all-time highs. Take a look at the similarity, guys. Impressive. They look really alike. So what's the message that this correlation is showing us, guys? That in late October of last year, a speculative mania on a lot of highly speculative stocks, which is not the case of Palantir or Robinhood, by the way, but this is the message that I want to get across. So a tiny bubble that we had inside the markets popped. So from late October and on, ACLO started to go down. Arcade Aviation started to go down. Joby Aviation started to go down. And I mean, you name it. So many stocks, guys, that just kept going up and up and up and up and up and up last year until late October. So many of you guys might be asking yourselves, why is Robinhood going down? This is the reason why Hood is going down. The markets anticipated that since last October, so many people that were making easy money buying short-dated options on highly speculative stocks couldn't keep doing that since late October and on. And guess what, guys? Hood reported earnings yesterday or on Tuesday, I think, and the revenue that was made out of options trading came out way lower than what the analysts were expecting. And the markets anticipated that. Look, it is the same. It is the same. Yeah. So these kind of stocks, these kind of very I'm not gonna say speculative, because I mean Hood for sure is not a speculative company. This is a serious company, that is making a profit, that is growing revenue and stuff. The same thing, needless to say, Palantir. I mean, we can have a discussion about the multiples of these companies, or about the multiples of these stocks, but these are real companies, right? With real business, with real businesses. Let's just put it that way. But they trade on very high multiples, guys. And these stocks have lost momentum completely. Completely. The markets don't want to pay higher multiples as of now. Why? Because we have a recession coming? I don't know. Because something is about to break in the economy? I don't know. But the markets don't want to pay higher multiples, guys. I mean, they don't want to pay Nvidia a forward P ratio of 24. Why would they pay Palantir a forward P ratio of 90? So you need to understand, before starting positions on most of these higher multiple stocks, that they lost momentum completely. And let's talk about a phenomenal earnings report, guys. Take a look at what Palantir reported, guys, 2 weeks ago. Take a look at this. This was one of the best earnings report that I've ever seen, guys. Take a look at this. Take a look at the revenue. Take a look at the revenue growth of Palantir, guys. Impressive. All-time highs, $1.4 billion. 70% on year-over-year revenue growth. Impressive. It's impressive. $600 million on net income. Take a look at the profit margin, guys. 43%. The report was phenomenal. A blockbuster report. Unbelievable. And take a look at the stock. So again, guys, the markets are sending us a message. I don't want to trade. I don't want to do anything with higher multiple stocks. If you didn't get the memo, you have to get it. So this is not a good time, guys, to buy Palantir. I mean, you can trade it here and there, but this is not a good time to buy Palantir unless you believe that Palantir is the future, bro, and that Palantir is going back to $210. I mean, yeah, as a long-term investment, you can buy Palantir here, of course. So a no touch below the 5 DMA, guys. For me, in order to start a position on a downtrending stock, I already told you this, I need to see buyers stepping in minor timeframes. So in the case of Palantir, I need to see it recapturing the 5 DMA, the 5-day moving average. This is non-negotiable. Oh, by the way, and the members of our Discord in Spanish know this. I was keeping an eye on Palantir yesterday, for a bounce back up trade. And I was waiting for Palantir to recapture what? The 5 DMA, $136. And I was about to start the position if Palantir had been able to recapture the 5-day moving average. It didn't do it, and I didn't start the position. Yeah, I didn't do it. Let me see if the market structure of Palantir is, looking like some sort of light at the end of a tunnel. Pltr. Let's go see. And woo, what is this, guys? Jeez. Take a look at this, guys. Again, this is a market structure chart. On top, the demand, buyers. At the bottom, the supply. Take a look at the demand. No buyers. There are no buyers. They forgot about Palantir. They forgot about Palantir. The Messi of artificial intelligence. Let's call the knives. Hey, the knives, what is going on with Palantir, bro? They forgot about Palantir, your boy. Should we buy the dip in Palantir? Yeah, hey, it's Alvaro. This is terrible, man. I mean, stay away from these guys. And yeah, at some point in time, guys, so the company is killing it. Like, killing it. I think that I don't know. At some point in time, guys, buyers will step in, but you need to wait until the 5 DMA is recaptured. Bottom line. Do you think crypto is tanking? Is tanking it as well? I mean, yes, of course. Of course. Oh, by the way, and you're mentioning this, right? Yeah, of course. Take a look at Bitcoin. When was the top? October. Early October. This was the top. Yeah. This was, guys, a historic pump and dump operation. Carried out by who? Who carried out the largest pump and dump operation of the world? In the history of the world. And they utilized Bitcoin. You guys know who it was. You know who it was. And Bitcoin is, as of now, this is dead, guys. Dead. So many people lost so much money on Bitcoin. So yes. I mean, yes. So let me take a look at what other requests do we have here. Let me see. So we did Amazon, Meta, Palantir, and we are, let me see, guys. 59 minutes in. How about that, guys? Out of speculative stocks, but forward looking, which sector do you see the most future in? Guys, I think that so the markets are very concerned, and I'm starting to be very concerned about, again, guys, I just told you, the capital expenditures that these companies are carrying out, right? So they might be a little bit of an overshoot here. And if that is the case, guys, they will end up buying the dip. When, I don't know. On, the Amazons of the world and the Apples of the world and the Nvidias of the world. So at some point in time, that should happen, I guess. Yeah, I guess. So you guys are asking now about GLD. So this is going to be one of the assets that will be in motion tomorrow with the CPI. Big time. So in the case of GLD, guys, keep an eye on the 20-day moving average and the 5 DMA. So ideally, you want to see gold trading above both the 5 and the 20 DMA. The 20 DMA is signaling as of now. Oh, let me correct this, guys. Hold, I have an issue here. So the 5 DMA, the 5-day moving average on gold is signaling $461. And the 20 signals as of now $453. If the jobs report of tomorrow, guys, happens to be cooked by the cooks of the Bureau of Labor Statistics, and they lie to us, stating that inflation is going down, that will put immediate downwards pressure over the US dollar, the DXY. If that is the case, and you know that gold is inversely correlated the vast majority of the time relative to the US dollar, so a better cooked than expected CPI data report is positive for gold. Yeah, it would put downwards pressure over the US dollar and GLD. If that were the case, we should see, so the key word here is should, GLD recapturing the 5-day moving average at $460, probably consolidating above it, and probably or potentially going up. So yeah, gold is going to be in motion tomorrow once the CPI data report comes out. Yeah. And on the flip side, guys, if I don't know, if something unexpected happens to the cooks of the Bureau of Labor Statistics and the CPI comes out hotter than expected, good luck with that. Then that would have the Dixie rise, and that would be negative for the GLD. There you go. That's it, guys. So in my opinion, I would be a buyer, to be honest with you. I mean, depending on the mechanical situation that we see between the US dollar and gold, of course, I would be a buyer potentially of a further pullback down to the 50-day moving average at $422. Or preferably, guys, and we've been trading gold. The members of our Discord can tell you guys that we've been trading gold pretty often. I would be a buyer of GLD consolidating above the 5 DMA for $160, and of course with the Dixie with the US dollar going down. Yeah, there you go, guys. I have to go. Yeah, we are more than 1 hour in, right? Yeah, an hour and 3 minutes in. So we have a big day tomorrow. Yeah, sleep well. Yeah, get some rest. Because again, guys, if the CPI comes out either hotter than expected, good luck with that, or lower than expected, we could see some fireworks tomorrow. Yeah, for sure. So thank you very much for every single one of you. You know, members of Christian's Discord, members of our Discord in English, and I mean we'll be in touch tomorrow on both servers. Okay, awesome. Thank you, guys. Enjoy the rest of your day. Love you. Thanks. Bye. Bye. Thanks.